All right. Hello, everybody. Welcome back to another episode of The Market Close. It is Thursday, August 22nd, 3:46 p.m. We've got earnings after the bell. That's going to be the most important thing today. We've got Workday, Intuit, Bill, and Cava. So we'll be looking at those four earnings in about 15, 20 minutes and see what happens. In terms of the broader market, we got a red day, folks. Got a red day, and probably a red day that was needed after 2 weeks of intense green. And honestly, a red day that was probably needed after a green day yesterday that we all thought would kind of be red. It kind of feels like the down 1% that we're seeing on the S&P 500 right now at 555. It is a day late because the BLS job revision was 45 minutes late. So maybe the 1% or 2% down day that I thought we would get yesterday, we're getting it today. In all seriousness, I don't think it is that concerning from the standpoint of a sell-off. I don't even really think this is really a sell-off. It's more so just a question of people taking some profits, and we had two really, really green weeks. You don't just go straight up to the moon. You have to expect some volatility. And that's some volatility that we're getting today. In terms of the macro data we got, and before we get to macro data, if we look at some stocks, SoFi's down 1.5%. It was down like that in the pre-markets. Robinhood, 1998, down 1%, basically at $20. Not that serious. Zoom, Kathy Wood has sold out of Zoom completely. So this one is hilarious that this one is up 12% on the day. Kathy Wood is completely out of Zoom stock. And I guess that's why Zoom is up right now. But Zoom is up today. PayPal is green today, holding some green. And then you got some other stocks like Netflix down 1%. Not that crazy. Palo Alto down 2%. It was up 10% this week. Again, just not that crazy. Regionals and financials were green today. So you saw money start to rotate a little bit into other sectors. Eli Lilly got upgraded this week to $1,000. It was at 972. Now it's 952. It's up basically 100% for the year. Again, the selling today, unless we see a continuation of it into the coming weeks, which we could because September becomes volatile, I don't think today is as intense as some of the people thought it would be, and kind of is probably a lagging day of red that we were supposed to get yesterday, given that jobs data that we got. Now, three pieces of macro data this morning. Tesla did, by the way, take a nasty decline. So we did get some BMW news in Germany that BMW is outpacing Tesla in terms of EU electric vehicle sales. I don't know if that's enough to tank it down 5%. I think this is more of like a little bit of a technical sell-off, given it went up to 220, and that's where it got rejected at. But that one is down 5%. I think that's one of the biggest losers today. And NVIDIA down about 3.7. Again, NVIDIA is up 44% in the past 2 weeks. You would expect it to take a 3% decline when it hits 130. And so that's what we're seeing right now on NVIDIA at 123. The three pieces of macro data we got this morning were actually pretty good. Housing beat expectations at 3.95 versus 3.9 million. PMI beat as well in terms of services and not manufacturing, but manufacturing's PMI was a very slight miss. And then jobless claims came in line with expectations. So the three pieces of macro data that we needed to see do well today, they did well. If these three pieces of macro data went against us, meaning we had more jobless claims than expected, we didn't beat on home sales and services and overall composite PMI that came in at 54.1 versus 53.2. If that was the opposite, we probably would have a bloodier day just because there would be better reasons for people to justify selling. But I think the blood today, you know what I really think the blood today is coming from? By the way, Cristiano Ronaldo, he has 20 million subscribers after starting a YouTube channel in 24 hours. It's absolute insane. But that's what he got. I think it's coming from this fear and greed index. I think, it's not like the most complex analysis, but every time you see getting into neutral / greed and then extreme greed, you tend to see a sell-off. People take profits. And we were in extreme fear at 507 all the way up until 560. Now we're in neutral. So it makes sense that people are taking some profits here today. Amit, what Palantir size shirt did you get? I got medium, and I've been wearing the shirt all day. It feels great, dude. It fits great, feels great. It's nice material, so that's the shirt that I got. And I think anyone who ordered those shirts, I think you guys will like them because it feels pretty good. So I think this is one of those days where people are taking some profits. Algos are getting technical. We did see Palantir hit 33 this morning, and then that ended up getting rejected. Palantir right here still at 31.97, down 1.78% of the day. Now, Snowflake has not had the best day. Snowflake down 14%. I mean, the selling did not stop at all. Like, there's the initial decline from 137. Then you got to 126. Then they had the earnings call. Then you went to 124. Then it just went further down to 121. Tried to get a green candle right here today. Then it went down another notch to 118. Then every time you tried to get a green candle, it just got rejected. And now you're at 115. It would not surprise me if we go below 100 on this, because breaking 120 was a major level of technical support that could justify 75 to 80. That's when it gets interesting as a swing back up to 130. If it gets really, in that 70, 80 level. You could argue at 70 to 80 bucks, it's actually reasonably priced, given, right now at 115 versus the growth. It's not like it's a horrible price. It's just not like the best price in the world. Now, granted, the bulls thought at 130, that was also undervalued. So at this point, it's in price discovery to the downside. And until you get some buyers stepping in, I have no idea when Snowflake is going to stop collapsing. And it didn't help that the market turned red today. One stock that is green as well, Grinder, up 1.44% for some reason. But Snowflake, definitely took a bit of a hit. Now, the way I think this gets bad over the next couple of weeks is very simple. September volatility we looked at, it's always down about 4% in the month of September. For the election year, I'm trying to get the best statistics on that. I still don't have that yet, but I think September's still down in an election year, but it's not down as much as it usually is during a regular year. So we're going to see, I'll get some stats on that and we'll see how bad September is in an election year, but that could create volatility. The VIX was up today as well. So VIX started spiking up again. Yeah, VIX is up 8% today. So you got some volatility there. And NVIDIA earnings. So really, it's just a question of going into September. We know September is choppy. If NVIDIA can beat and raise and really beat and raise aggressively, I think we're going to be okay. And I think the market's going to calm down. If they can't and jobless claims start ticking up and you start to get a little bit of weakness in different areas with the consumer, you could see a volatile September. I don't think this invalidates the broader bull market thesis. I think that is intact. I think there's just too much data to support that. Earnings growth is good enough. All those good sort of pieces of the pie. But outside of that, a volatile day like today is likely needed after 2 weeks and just expected after 2 weeks of going fully green. Money market fund updates. I don't have that yet. That'll probably be out at 4 p.m. Again, money markets increased by 28 billion last week. And 30 billion the week before that, 50 billion the week before that. So let's see this week if they decrease or if they continue to increase after the past 3 weeks. PayPal is green. That is correct. PayPal is green. Faraday futures up 120%. That's ridiculous, dude. Why is Faraday? We haven't looked at this stock in so long. 120%. Well, they did a reverse split. They had to have done a reverse split. This thing was like 40 cents last time we looked at it. Right? They had to do a reverse split. It's not legit $7. No way. Yeah, there's no way because it was at 18 right here. Hold on. Let me see the year to date. Yeah, I definitely think there was a reverse split done. Yeah. Seems so. Interesting. Well, if you're in Faraday Future, congrats. You're up 120%. This and ASTS. ASTS, I found out today, does $1 million in revenue and is worth $9 billion. I did not know that. I found out today. So for anyone holding this one, again, if there's some long-term thesis, then I guess that's what's going to help it. But $1 million in revenue, $9 billion market cap, $9 billion market cap. It obviously is really speculative, but I guess we'll see how that ends up playing out. QQQ down about 1.7. Again, seeing this type of red, it feels a bit normal. I know that doesn't sound great on a red day, but I didn't. After this, we got this massive V shape. You're looking at the Qs right now, 503 to 423, then back up to 484. Did we really expect it to just go up to 503? And we've been talking about this for the past couple of days. Like, you're going to get some level of volatility here. The question just is what buyers step in to take advantage of that volatility. And we'll see over the coming weeks if buyers are there to snatch up these prices. 1 million annually. Yeah, 1 million in revenue annually, 9 billion market cap. But again, people are betting on the potential of it, which is the different part here. Okay, let's get a quick update from CNBC on the markets, and then we're getting right into earnings, folks. We got a lot to do. Bill, Intuit, Workday, all these are SaaS names. Cava, the restaurant, and then we'll see what results we get, and hopefully we get another indication on the consumer and SaaS IT spend overall, because that'll help us understand Palantir, and that'll help us understand the state of the consumer.
Side of institutional securities is that Diego Anzoátegui on that team, who is our inflation guru, is able to sit down with all the equity analysts around the sectors and work with them individually on what they're seeing in their sectors and what they're expecting, and then understanding how the BLS calculates all of those things. And so, that the Fed call for that team has been fantastic. That the Fed would start cutting in September and go steadily through the middle of next year, because the inflation forecasts have been spot on.
At this point, that's the other thing I forgot to mention. Stocks are probably scared because tomorrow Jay Powell's speaking. So that's the obvious thing I forgot to mention in the beginning of the show. If Jay Powell says something stocks don't like, they're going to sell off. So usually they tend to sell off before Jay Powell speaks.
Is your argument that risk assets are still too benign relative to the odds of a recession?
Well, I think they are, which might sound odd to say because I'm a big believer of the soft landing. We've had that soft landing call at Morgan Stanley since March of 2022. Can you believe it? That's a long-standing call. It's very difficult to keep a call for that long. But at the same time, there is a slowing of the economy, a slowing of the labor market, a slowing of inflation, and the Fed has to get this right. And so I look at something like equities that seem to be pricing next to zero chance of recession. I look at corporate credit that certainly doesn't seem like spreads are pricing in a real big chance of recession, or as big of a chance of recession as it probably should, just to be realistic. So while I'm a firm believer in the soft landing call, I think risk assets are probably a bit too benign.
Even some of your peers on the street took their recession odds up a little bit after, say, the July jobs number. Then they brought them back in once we got retail sales and claims.
Well, I think it's a little bit ridiculous to move recession probabilities around like that, so high frequency. Recession probabilities are always fraught with issues, right? And a lot of the recession probability models themselves have a difficult time discerning the difference between a kink in growth or, say, a shift in regime, meaning from very strong growth to slower growth, versus strong growth to recession, right? And it will misinterpret. And so sometimes these models will misinterpret. And so making minute changes really to recession probabilities, I'm not sure that that's really helpful to investors.
Lately, you're writing about maybe reaching a terminal rate earlier than you had previously thought. What's your thinking on that?
Well, I think when we think about the risks to the Fed cutting steadily all the way through the middle of next year, what are the odds that all of that goes perfectly? Right. And so basically, you would be saying, the risk for downside from here is greater than the risk to upside. And look, I think Powell has shown that he can be nimble around the incoming data. I think he would point to 2019 as a prime example of when the data was deteriorating. They were concerned about the global recession approaching. They moved to the sidelines and started cutting, sort of that quick course correction. Sort of 94, 95, right? Recognizing that you could do some quick actions here and keep the economy going. And so I would think that now that you don't have to worry about inflation, you can focus on the labor market. Some of that quick course correction means that some of that cutting could be front loaded.
We're going to talk more about certainly.
I do think that the odds that the Fed gets this perfect are tough in regards to everything we've got going on. But at the end of the day, I still believe that rate cuts are going to be broadly bullish, and that will create expansion, that will create more liquidity, and that will create more buying opportunities. So we're going to see in the next couple of weeks kind of how this plays out. But red day after 2 weeks of green likely is what was probable after 18,000 jobs of a revision. Again, that was not a good report. So the fact that the market kind of just took that in and took it on the chin makes sense that you're seeing a little bit of the ramifications here today. Cava reporting after the bell. So real quick on restaurant stocks. They've done amazing year to date. Now, some of them have done bad. Your Starbucks, your McDonald's, your Domino's Pizza, Papa John's, they haven't done great. But Texas Roadhouse up 41%, Cava 151%, Shake Shack 47%, Wingstop 52%, Chipotle 19%. Chipotle was up almost 40% at one point, but then they lost their CEO. Overall, pretty good year for the restaurants. So you had to be selective in the restaurants you picked. You couldn't just pick any restaurant. But restaurants have done well. And today we're going to see after the bell how Cava ends up doing. We got Workday, Bill, Cava, and Intuit after the bell. Thursday, August 22nd, 4 p.m. Thank you, everybody, for being here. The stock market is now closed. All right, so let's take a look at what we have here on the day. So first, let's quickly go to the Mag 7 and just see how things ended. And then I think we'll get earnings pretty soon. Microsoft ended, down 2% today. Meta down 0.6%. Meta was at all-time highs today. Google down 1.2%. Amazon down 2.3%. NVIDIA down 3.7%. Tesla took the brunt of it, down 5.65%. So the Mag 7 didn't have the best day. Crypto also all went pretty red, even though Bitcoin's still holding 60,000. CleanSpark down about 4% today. Coinbase down 3%, Robinhood down 1.4%, Marathon down 4%, MicroStrategy down 5.38%. And then in the semis, pretty much everything was red as well. AMD down 4%, SMCI down 3%, Intel, I did not. Intel is down 6%. Okay, so Intel got hit. ASML down 3%. TSM down 2%. Qualcomm 3%. ARM down 1%. Marvell down 3.6%. Dell down 2%. And then Lam Research down 4%. Micron as well down 3.7%. So a pretty red day across semis, crypto, and the tech stocks. And that made sense because NVIDIA kind of led the way, going down 3.7%. Right now, Palantir actually held up pretty well today. I mean, down 1.87, but 31.95. Even if Palantir were to fall to 27, that is still up 70% year to date. So it's, every time I see Palantir go down, it's hard to get too upset about it. But even with the decline we saw today, still holding close to 32 at 31.93, which is not bad at all for Palantir. Snowflake ends the day down 14.7% at $115.21 on the day. All right, earnings. We already have some movement. Workday is up 1% after hours. So we got a little bit of a green candle right there. And then Cava is up 1.1%. Let me see what numbers I can get. And we'll start keep going from there. So let's see if we can get some numbers. Some of them probably report at like 405-ish. Let me know if anyone has these names: Workday, Intuit, Cava, and Bill. I don't keep up with all of these names that aggressively, but a lot of them are software names and SaaS names, which is important for Palantir and IT spend. And then the restaurant ones is important a little bit more in the context of the consumer. I know some of you guys have eaten at Cava before. Okay, Cava basically just went red after hours. It's kind of flattish. No results yet. Intuit also flat. Intuit, $185 billion market cap. This is a big one, down about 1%. They own like QuickBooks and TurboTax and Credit Karma. So Intuit is like a big holding company for a lot of these different sort of software tools. And a lot of you might, even use some of those. Okay, we got Intuit. We got it. Oh, wow. We got Intuit, Workday, and Ross. I didn't know we had Ross today. Let me add that to the list. We had Ross. All right, here we go. So let me, what's the ticker symbol for Ross? ROST. Okay, ROST. Let's talk first about Intuit. So Intuit, we are up. We got a green candle on Intuit. Numbers for Intuit: EPS of 199, beating expectations of 184. Revenue of 3.2 billion, beating expectations of 3.1 billion. Beat on the top and the bottom for Intuit. Pretty much flat movement. Ross is up 4%. Ross stores. Ross market cap is 50 billion. I did not know Ross was worth 50 billion. Ross earnings: EPS 159, beat 149. Revenue 5.3 billion versus 5.2 billion. They beat on the top and bottom line. Ross sells dresses, right? Clothes. It's like bargain clothing, shoes, home decor, all that stuff. So that is a big consumer company. I would love to hear what they have to say about the consumer. That one in line with Target and Walmart, that's going to be important. Intuit now up 2%, and then Workday up 2.65%. Workday earnings, we have them. Workday EPS of 175, beating expectations of 165. That's a beat. Revenue of 2.08 billion, beating expectations of 2.07 billion. That is also a beat. There you go. Workday now turning flattish, now going red. Okay, Workday now going red, down 1%. Ross is still up 4.9%. Intuit still up 2.8%. Workday now going down 1.12%. $61 billion market cap for them. And then Cava, I don't think we have the numbers yet. And Bill, we don't have the numbers yet, but we'll get those in a bit. Intuit still up 3% on the day. Does TJ Maxx own Ross and Marshalls? Do they? I'm not sure. I feel like you're right on that. I'm pretty sure TJ Maxx does own those companies, actually. I'm not sure on that. We'll confirm on that. But Intuit up 3%. And again, Ross right here up 4.9% right now. Thoughts on Cava earnings? I don't know about the company that much. It's up 151% year to date. So I'm a little fearful that any numbers that are just not the best tanks this thing. But it's up 150% for a reason, right? They've obviously shown tremendous growth. So if they can continue that growth, maybe the market continues to reward them. But we're going to get their numbers pretty soon. All right, let me see what we have here. Let's try to pull up some more numbers. And then we'll see if we can get Cava. Last time I think Cava came out at 420, so we might have to wait for that one a little bit. All right, let's get some coverage on Intuit and see that one right now. All right, here we go.
Hey. Mike, I do. So it looks like a beat here for Intuit. This was its fiscal fourth quarter EPS coming in 15 cents above estimates, $1.99. That was better than expected. And then that was on revenue of $3.1 billion. Also a beat. Revenue grew 17% or so year over year. And then Credit Karma revenue within that was up 14%. We're not going to compare the guidance numbers here, but it does look like there's a change in how they're recognizing revenue. And that appears to be weighing on the outlook. They're expecting revenue growth of 5 to 6% for the year, and then expecting desktop ecosystem revenue to drop about 20% in the first fiscal quarter of this year. But they do say here, return to growth in the second quarter. They're saying it reflects this transition to a recurring subscription model and then some product updates. Companies expecting those changes to lower revenue in the first quarter by about $160 million. Shares, though, up here after hours. Mike, back for you.
All right, Kate, thanks. Maybe something similar to what a lot of software companies are doing in terms of their sales practices. Workday earnings also out. Julia Borston has those numbers. Julia.
Mike, Workday beating expectations on the top and bottom lines. Earnings of $1.75 adjusted, beating estimates of $1.65, so beating estimates by 10 cents per share. Revenues of $2.09 billion, just a hair ahead of the $2.07 billion estimated. And then looking at guidance, third quarter subscription revenue guidance is pretty much in line at $1.96 billion versus the $1.97 billion, which is the estimate. You see shares are down about 2% now in after hours trading. Back over to you.
All right. Yeah, it actually has been something of a tough stock, down 16% year to date. Thank you, Julia.
Okay, we got bill numbers, folks. We got bill. So bill numbers, Q4 revenue, this stock is up 5% right now. Let me show the ticker. Now it's up 3%. Revenue 343 versus 327, beat on the revenue. Adjusted EPS 57 cents, beat on the estimates of 46 cents. Q4 core revenue 301 million, adjusted operating income 60 million versus 41 million, beat on that. And then net income 63 million, up from 59 million or 51 million. So they beat on that by about 13 million right there, or 14 million. Not bad for Bill. Not bad at all. Stocks not reacting too crazy after hours. We got it going. Now it's down. All right, so now it's taking a little bit of a hit. Went all the way up to 57 after hours. That was up almost 5%. Now you're down. Wow. You're down 4%. Intuit's still holding up. It's 2%. Workday down 2%. Again, that one had a little bit of a tough year. Red Robin apparently at earnings today. That's down 9%. We'll pull up their numbers, but Red Robin burgers, I don't know if you guys have I don't think I've eaten there in like a year. Workday down 2%. Cava's up a little bit, but we don't have the numbers yet. Bill's green. It went up 7%, went down 4%. Now it's flat after hours. Now it's back. Yeah, now it's basically flat. Interesting. Intuit's the only one that's holding its gains. Intuit's pretty much the only one holding its gains. It went all the way up to 687. Now it's at 685 from 665 on the day. Okay, so that's what we have right there. Friday sell-off tomorrow. Yeah, it's very possible, dude. If we get a little bit more volatility and people just want to take profits on Friday, I think that's very possible. I just think that's normal. I mean, it's been 2 weeks of green. Like, you're going to start to see a little bit more profit taking after that. Ross Store is still up 6%. Let me see if I can get their numbers. I really want to see what commentary they had about the consumer. So Ross earnings, again, they beat on the top and the bottom line. Okay, so in terms of consumers, they said Ross Stores primarily serves low to moderate income customers. The company anticipates more challenging sales comparisons in the second half of the year due to the economic pressures on its customer base. Projected comparable sales growth for Q3 and Q4 is modest at 2 to 3%, following previous gains of 5 and 7%. Okay, so they are lowering guidance for Q3 and Q4 in terms of same-store sales, which is a big metric for these retailers, on the backs of the fact that their consumers, they argue, are lower or middle to lower income, and that should be a little tough for them to be able to keep up the same levels of revenue growth that they're doing from 2023. So you're getting basically the argument from Ross, I'm reading right here on their earnings, that there's going to be a little consumer weakness for them. So another company saying, hey, we have some consumer weakening problems as well. Uber is out. Uber news is out. What do we have on Uber? Uber's up 1.5%. Let me see. Let me see what news we have on Uber. They don't have earnings today, but let's see what else they have. Uber and Cruise just announced a multi-year strategic partnership to bring Cruise autonomous vehicles to the Uber platform. Cava's up. Okay, we'll go back to Uber in a bit. Cava's up. Cava's up. Let's go to Cava. Cava is up 3%. There you go. There you go. Let me see if I can get Cava's numbers. Interesting about Uber, dude. It seems like they're taking this FSD threat kind of seriously. All right, Cava. What are the numbers on Cava? So we have revenue is 233 versus 218. They beat by about 15 million there, 12 million. So they beat on the top line. Same store sales of 14%. That's incredible. They opened up 18 new restaurants. Profit margin 26.5%. I think that's like one of the best in the industry. Again, restaurants don't have the best margins. Net income of 19.7 million, up 6.5 million in Q2 from 2023. Adjusted EBITDA of 34 million, up 59%. Those are pretty damn good numbers. We're up 2% on the stock, not some crazy movement. We hit 112 at one point after hours, so it was up almost 4%. Now it's up 2.5%, but that's not a horrible number. Intuit's still up 2%, billing up 2.74%, Workday down 3%, and then Cava right here up 5%. There you go. Now Cava's getting some momentum, and Cava is starting to move. Okay, not bad. These are good earnings. These are good for anyone who was afraid that Cava was up so much this year and they would take a little bit of a beating. It looks like these numbers were good enough to justify something that wasn't as bad. Let's see if we can get some more coverage here on Cava. Okay, we have Bill and Ross, so let me look at those two real quick, and then we'll do Cava.
Beating expectations when it comes to earnings, reporting $1.59 in terms of earnings per share. That's 9 cents better than the $1.50 estimate. Revenues of $5.25 billion, right in line with estimates. And the company's third quarter guidance also right in line with estimates, guiding to third quarter earnings per share between 135 to 141. And the estimate is at 138. Same store sales are guiding to between 2 and 3% growth. The street account estimate is 2.6%. So again, pretty much right in line with estimates. But that earnings beat driving the stock higher, and after hours trading is now at more than 6%. Back over to you.
Yeah.
Cava's up 7%, guys. Cava, talk about an earnings, bro. Holy crap. We'll talk about NVIDIA in a bit. I see you guys in the chat talking about it. We'll discuss NVIDIA. Cava up 7%. All right, I just got money market funds data. So let's do a poll in the chat. Do you think it went up or down? This is a very interesting money markets report. So let's see what you guys think in the chat about this one. Let me put the poll right now. See what you guys think. So here we go. Money markets up or down? This is, by the way, last week was the highest we've had money markets ever at $6.22 trillion on the sidelines. Today, we got an update. Let's see what you guys think. Cava right here up 5.28%. Billings up 4.41%. Bill Holdings. Intuit up 3%. Ross up 5.6%. Interesting that Ross is up even though they said the consumer is going to be weak in Q3, Q4. So I wonder why the street is pumping them right now. Maybe there's something deeper in that call we have to go through. But you would think that they would decline on that guidance, but they're doing okay. Red Robin's down 15%. RRGB. Let me see if I can get those numbers real quick. RRGB. I didn't even know this was public. It always amazes me when I find a company that's public, like that I know about, but I never knew the company was public. Okay, Red Robin, $300 million in revenue. That's up $1 million year over year. Net loss is $9.5 million compared to a net income of $3.9 million. So they're unprofitable again. That's not good. If you go from profitability to unprofitability, that's not good. CEO says, our results for the second quarter and our reduced guidance for the year are not what we expected when we last communicated in May, with the slowdown experienced in the broader restaurant industry making the substantial progress we continue to make against our North Star plan. All right, so they're saying no one's coming to eat at Red Robin's. He continued, that said, we have seen multiple proof points that indicate that the initiatives we implemented over the past 20 months have elevated the guest experience. This is showcased by the guest satisfaction scores increasing to levels Red Robin has not achieved since 2016, comparable restaurant revenue exceeding the industry average growth during the past 3 months, and traffic growth in line with the industry. He concluded, collectively, the actions we are taking and great feedback we continue to receive from guests and team members give us confidence. All right, so I think this is a Red Robin problem, not a restaurant problem. I mean, we've seen restaurants report good numbers. I think people just don't want to eat at Red Robin. That's the issue right here. $74 million market cap on Red Robin. Wow. It's almost like a penny stock, dude. That is crazy. Cava's up 7%. If Cava can put up good numbers and Red Robin can't, it's about the restaurant. I don't think it's about the consumer itself. All right. What did you guys say on the poll? 52% of you say up. 49% of you say down. It's basically 50-50 right here. I'm going to end the poll right now. Here we go. Money market funds have gone up by $25 billion. $6.24 trillion, the highest in history in the United States of America, are now stuck in money market funds getting 5.5%. This is interesting. The markets have rallied over the past 2 weeks. Money market funds obviously have not gone into the broader market. If this is net increasing by 25 billion, it increased by 90 million over the past 2 weeks. So you've got $110 billion increase over the past 3 weeks into money markets. It seems like people are scared and they don't trust the Fed for this rate cut. So there you go. There you go. That is interesting, dude. I expected, I thought it would go down. I thought if the market's pumped almost 10% in the past 2 weeks, we would see some of that money come from money markets. Nope. It is stuck inside money market funds. And now begs the question, if we lower rates by 25 bips, is that enough to actually get some movement in the context of of people leaving money market funds and feeling that, hey, we need to get out of this and get yield into the markets? Or do people feel happy with 5% or 4.75%, even if they're not getting 5.5%? We'll see in October, after the rate cut, and how people think of it. Cava's still up 7%, Bill up 4.8%, Raw Stores up 5%, Red Robin now down 12%. It was down 15%, so you got some people buying the dip right there. And Workday down 4% on the day. Okay, let's talk about this Uber news, because this was interesting. So Uber's partnering with Cruise. Why is Uber down 3% on this? Market seems to not like it. Here's the news for those that didn't see it. Uber and Cruise just announced a multi-year strategic partnership to bring Cruise autonomous vehicles to the Uber platform. I don't know, dude. This is so basically Uber is going to say that you can order a Uber and it could be an electric vehicle, essentially, or not electric, but like it could be an autonomous vehicle. So is this good for Uber drivers because like they're kind of replacing their workforce? B, I guess the stock is down because the street doesn't think this is going to be profitable for them, or it might even hurt their growth. C, I think they are deeply afraid of Tesla. And, we talked about Tesla this morning and the threat of FSD and that Elon needs to be serious about getting it out there. The fact that Uber just made this news and this update probably means that they're expecting Tesla to come out rolling with the Cybercab pretty soon, like at least first half of 2025. And if that happens, they know their stock perceptually is going to take some damage. And so they're trying to hedge back against that by partnering with Cruise. Now, is Cruise the company you want to partner with? Do they actually have the best vehicles? Is GM the sort of parent company that can help do this? I don't know. They won't partner with Tesla. Yeah, they're definitely not going to partner with Tesla. And it would be funny because everyone has been saying Tesla should just buy Uber. I actually think that's not a horrible idea. Uber has like a big user base, almost 140 million users. Like Uber Eats is a great profitable. Like I don't hate that at all. It's just if Uber is going to even want to have any partnership with Tesla or work with them in any productive way. So Uber right here down. Jesse says, I don't see them flowing out of money market funds until we get sub 4%. Yeah, I agree with you. I think some will flow out, but the vast majority of money, until you get the yield to be really low, is not going to go. People were saying that about Robinhood. They were like, well, when we have rate cuts, won't people want to take their money out of Robinhood? Yes, people will want to get yield, but if Robinhood's not giving you 5% and they're giving you 4.5, it's not like SoFi is going to give you 5% or Capital One's going to give you 5% or JP Morgan's going to get, like everyone's going to take a hit, right? So wherever your money is stuck, you're probably going to get the best yield you can get from that money because no one is going to be able to really give you that much more because they're going to be losing money if they give you more money once the federal funds rate is cut. So I think everyone's going to have to reconcile with not having free money or like risk-free money when rates really come down. But I mean, after 25 bips, I don't know if that's enough of an incentive to get people to care. Shams Anchor sold another 50,000 shares of Palantir. All right, let's pull that up. Again, that makes sense to me. Insider selling is pretty obvious as the stock is up almost 100% year to date. Let's see his average, dude. Let's see if he got the top today. So the top was 33.13. Let's see if he got the top, dude. It's always funny to see this. All right, so we'll do the math right here. Let's see if he got it. So we have 1.627. So 1,627,500 divided by 50,000. $32.55. Okay, so he didn't get the top, but $32.55 was his average that he sold. For those that are saying, hey, if the insiders are selling, shouldn't you be selling? I think there's a couple answers to this. Number one, the insiders have had these shares since like 2005, 2010, right? So them selling at these levels is like a big return for them. If you bought it at 15, that's still a great return for you, but it's not as big a return for the insiders who have kind of dedicated their life to the company. Number two is, if you want to sell because the insiders are selling, I don't think that's a bad thing to do. Like if you think, hey, Carp is selling at 33, I want to take some profits at 33, that's fine. But you have to remember, Carp has 40 million shares, Peter Thiel has 120 million shares, and it's pretty obvious they're not leaving for a long time. So your long position probably is going to be intact with their long position, even if they take some profits along the way. So I don't think it's horrible to sell when the insiders are selling. It does give you a signal that the insiders are also thinking, hey, this is getting a good, attractive price to take some liquidity. But it doesn't mean, you get rid of your entire position just because the insiders are selling, or at least that's not how I've ever thought of it when I see an insider sell. It has to be egregious, dude. It has to be like Open Door. Like the Open Door president, when he started getting rid of all of his shares back in 2022, I think his name was Kevin Zhu. That's when you're like, okay, what's going on, buddy? And then he resigns after a couple weeks. Then you realize, okay, so the selling was or DNA, Jason Kelly selling his shares. That like, those are more telling signs versus, a couple 100,000 shares here and there taking some profits. It's also important to remember that insiders are making more shares each quarter, so it's good to take some profits off the table. Yeah, they have restricted stock options. They're getting more shares. Also, they have to pay the taxes on these shares. Like, as soon as Sham's about to pay 50% of that money to the government, especially, I don't know what state he's in, Colorado, California, whatever it is, like those capital gain taxes are going to be hit on him, so a lot of that money, although it seems like 50,000 shares is a lot, a ton of that goes to paying to taxes, given the income bracket that he's probably in. So for them, it's really just about making sure they take profits along the way. Insider sell for infinite reasons, only buy for one. Yes, exactly. All right, let's get some more updates on these earnings numbers, and then we'll keep going from there and get into the other headlines for today.
And after I was actually sending that stock to what looks like a new high, Julia. Thank you. Bill Holdings, next on the earnings parade. Kate Rooney has those.
Bottom line for Bill, and then the company's also announcing a $300 million buyback. We'll start with that EPS number, 57 cents. That was an 11-cent beat on revenue of $344 million. Stronger than expected there. It looks like Q1 EPS guidance is a little bit light here. And then on revenue guidance for the first quarter, it is stronger than expected. So sort of mixed there on guidance. But again, that $300 million buyback, a headline, as well as shares here up more than almost 2% or so, Mike.
Yeah, a little bit of relief for a stock that's had it kind of rough. Kate, thank you very much. Paul, just headed back to you here. The earnings piece of the story for the bull thesis has started to kick in, or at least broaden out. Many people talking about the fact that you do have the majority of companies now clicking back to earnings growth, and yet we still have an S&P 500 at 21 times earnings. It seems like it's priced for that kind of a growth. So going into the last few months of the year, what's the next thing do you think that would have to kick in to bring that bullish thesis about?
So I think what you're seeing is the consumer, which there has been concerns over in the last few months. The consumer is showing strength here. We saw it in Walmart. We saw it in Target. And now we're seeing it in Ross stores today. We saw it in the retail sales report last week. And then we also saw it from Brian Moynihan when he made comments about a week and a half ago, suggesting that consumers still have higher checking balances than they did prior to COVID on an inflation-adjusted basis. So they're not as flush as they were, when the government was just handing out stimulus checks every quarter, but they're still doing better than they were prior to COVID. And that's a good thing. So I think that could set the stage for a better market, or for a continued strength towards the end of the year. And as Deepak was mentioning, seasonality in the short term is negative. It's one of the worst 1 month periods of the market here. But if you shift out to 3 months, it's one of the best 3 months periods. So you got to get through that little valley here, the late August, early September period. And then towards the end of the year, you can finish off strong.
I 100% agree with that. And again, for those in the recession camp, we've got to see an incredible amount of unemployment to really begin triggering that at scale, along with just rapid earnings deterioration in terms of Q3 growth, because we're done with Q2. Q2 has crushed it. Q3, we'll see what happens. But based on the guidance for Q3, I don't think we get those rapid deteriorating numbers for American companies that are reporting. Okay, Cava, let's go deeper into their numbers. So year-over-year growth of 35%. I did not see that when we initially reported the Cava numbers. That's incredible, dude. That's like tech company numbers, 35% growth. Same store restaurant sales growth of 14%. That's incredible. 18 new restaurants opened during the quarter. CEO says during the quarter, traffic grew 9.5%. We opened 18 net new restaurants and driven by the power of our unit economic engine, generated average unit volume of $2.7 million. In addition, we launched our new grilled steak main, once again exhibiting our excellence in culinary innovation. Grilled steak is significantly outperforming our expectations and giving guests another reason to visit Cava and come back more often. I'm assuming they do the grilled steak at medium well, and that's why customers are enjoying it. Our results in the second quarter are continued to demonstrate the strength of our category-defining brand and our unique and compelling value proposition. Revenue growth 35%, 18 new restaurants, AUV $2.7 million, restaurant level profit about $61.3 million, digital revenue mix 35%, so they have a good mix of people ordering online. Group net income $19.7 million, that's up from $6.5 million, so that's up a little bit more than double. And $48.9 million of free cash flow, which is up from $22.7 million. Dude, that's not bad. This is an incredible quarter for Cava. This is a great quarter. I've never eaten at Cava. I need to try this out soon. But for a stock that was up 150% year to date, they are not slowing down. Now it's up a little bit more. Now it's up 155% year to date. And they're continuing that momentum. And they're doing what they have to do. So there you go. Cava, decent earnings. Okay, let's talk about NVIDIA, because a lot of you are scared about NVIDIA. So there is no news on NVIDIA today. I think we just have to sit back and remember NVIDIA was up 40% over the past month, dude. NVIDIA was at $90. It got to $130. It was up a lot, going down to $124. Again, if you look at this chart, for those that hold NVIDIA in the chat, I wouldn't get so scared. It's at $124, down to $90, all the way back to $130. Now at $124. This is not something that I would get super scared about. And there's no news on NVIDIA. If you saw some people on CNBC talking, bad about NVIDIA, there's enough people also talking good about NVIDIA, right? It's a market. You're going to have people who are bullish and bearish on the stock. I don't think there's any real news. I think it was just up 40%. It's taken a breather. I think if you own NVIDIA, I don't have a heavy position, but if you have a heavy position in NVIDIA and you can't stomach some of the day-to-day volatilities of 4 or 5%, then you really don't understand NVIDIA. If you really have a big, heavy position in NVIDIA, and this is why someone like Jose, who could care less about the swings back and forth, is because he understands where AI is going, where GPUs are going, and where demand is going. Now, he also believes eventually the AI infrastructure build-out will be done, and NVIDIA will not be able to produce the same numbers that they're producing right now and over the past couple of months that they've done. But at the end of the day, this thesis is not going anywhere. And that's why I kept saying, I think Jensen on the call has to be a therapist for Wall Street. Because he needs to get Wall Street to just remember why they've given NVIDIA a $3 trillion valuation without being so worried about every single hyperscaler spending a little bit or not spending a little bit in the context of NVIDIA. So is the fair value at 120? I don't necessarily know. It really depends on the next earnings. Remember, my fair value has always been on $5 of EPS in 2025. You put a 30 PE on that, boom, you get to 150, right? Which is a little bit higher than there is right now in terms of the stock. And I think that's a way to think about it. But if they don't get to $5 of EPS and they do $4 of EPS and you put that same 30 PE, then you get to 120. Or if you give it a 35 PE, you get to 140-ish. So really, it's a question of, if you own NVIDIA, you have to ask yourself, how much earnings per share do you think they're going to do in 2025? And that is a significant question that I think is important to answer, because you can't, Palantir is not going to do $5 of earnings per share next year. But I also think Palantir can withstand a multi-hundred PE, because it's a growth company and the market is thinking of it in a fundamentally different way. NVIDIA is not going to have a multi-hundred PE because it's much more mature. They're going to have a much more reasonable PE at 25 to 40-ish. And that PE is going to be based on their earnings per share. So if you own NVIDIA and you see volatility, the thing that should protect you against volatility and should tell you that this is cheap, like at $90, the reason it was cheap is because if you think they're even doing $4.50 of EPS in 2025, that's a 20 PE, less about 18 PE. That's obviously cheap. And so that's when you buy. But outside of that, I wouldn't be super concerned just because you got a little bit of downside today. Speaking of NVIDIA, I want to play this clip. This is one of the clips I saw yesterday about someone being a little bit more bullish on NVIDIA, and I think they had a decent argument. We listened to the professor the other day who was, I wouldn't say bearish. He just felt NVIDIA was a bit overvalued here. He liked Amazon over NVIDIA. Let me pull up another clip that is a little more excited for NVIDIA and gives a different piece of reasoning for it. But yeah, for those that are concerned that it's down today, I mean, it was up a lot. you know, I would imagine that it takes a small breather here today. Okay, while I'm looking for this clip, let me get back to the coverage we were looking at and see if I can get Cava, because we still need to get coverage on that. Let's see. Yeah, there we go. All right, let me see if I can pull this up right here, and then we'll keep going.
Cava Q2 beat on the top and bottom lines. EPS 17 cents. That is a 4-cent beat. Revenues 233 million, higher than the 220 million estimated by analysts. Same store sales, a huge beat, up 14.4% versus estimates of up 7.9%. Another rarity in growing traffic in this environment. That traffic number up nearly 10%. Prices up almost 5%. Profit margin of 26.5%, roughly in line with analyst estimates, and suggests the big earnings beat here was more tied to the restaurant's strong traffic and sales performance. Cava's adjusted EBITDA 34.3 million versus 29.6 million estimates. The company also raising guidance for full year same-store sales, profit margin, and EBITDA. CEO Brett Schulman said steak, which is this new menu addition, is doing well, saying in a statement, quote, grilled steak is significantly outperforming our expectations and giving guests another reason to visit Cava and come back more often. The stock, as you can see, higher by just under 8%. It's also among the sector's best performers this year, up more than 140% year to date. Mike, back over to you.
Okay, high expectation.
Okay, let's get that update on NVIDIA now, and then we'll talk more about that after this.
Investor Eric Jackson sees more upside for the space and is looking to buy a mega cap name he actually sold just in July. He's the founder of EMJ Capital. Joins me now. Welcome back. It's good to see you.
You too.
Well, you don't feel like being out of Amazon that long, I guess, right? That's the one you sold, and now you got your eye on it again. Why?
My favorite three, Scott, in the Mag 7 right now are Apple going into the iPhone upgrade cycle this fall. Then Meta, because they're at all-time highs. They're really the first poster child of somebody who's making money hand over fist from AI. And then, of course, NVIDIA, the godfather. But after that, it's Amazon. And I did sell out of it in July, but it's darn cheap on a 5-year basis. It's like trading at all-time lows on a forward PE basis. Nothing really was wrong with the quarter that they just reported a couple of weeks ago. So I think they are definitely one that's on my radar, and I plan on adding probably in a few weeks as we start to get closer to the next tech earnings season.
Well, we can't get to the next tech earnings season before we get out of this one, and we still have to consider NVIDIA a week from today. How do you see that?
I mean, it's huge, obviously. It's the most important stock in the world right now. So, if they laid an egg, it would be a major problem for the whole market. I don't think they will. I think they're going to surprise to the upside. If you look ahead at sort of what Wall Street is counting on a go-forward basis, it's almost like this explosion of AI revenue that they've seen over the last year and a half, is going to just sort of dry up. And I just don't think that's the case. Eric Schmidt gave a talk at Stanford recently. It was sort of leaked a few days ago, and they took it down off of YouTube because he made some critical comments about the work culture of Google. But embedded within that talk, one of his throwaway lines was, in talking to Sam Altman, they said that together they both believe that each of the hyperscalers, plus the OpenAIs of the world, we're probably going to have to spend something like $300 billion in NVIDIA chips over the next few years, each, $300 billion each. So, NVIDIA could basically only supply those hyperscalers, and their order book is going to be full for the next 4 years. It's a massive, staggering amount of money that's sitting in front of them. And, God love the Broadcoms and the AMDs of the world, but, the vast majority, like more than 95% of that revenue is going to go to NVIDIA.
Well, I mean, how do you just talked about, obviously the money that NVIDIA makes is the money that the hyperscalers are spending. So at what point do you look at what the hyperscalers are spending and say, you know what? It might be a little longer for the ROI or the return on invested capital side of the story than I think we're willing to admit. How should we look at that?
Well, I think that the Meta is showing now that they are making a lot of money from this, and that's why their stock is mid 500s right now. So they, I'm starting to think that Zuckerberg was sort of leading us on several years ago when he was saying that he was spending all this money on Reality Labs, and people panicked and sold the stock down to $80. I kind of think he was trying to throw off his competitors by.
Do you guys agree with that? Do you think Zucks was playing 4D chess and basically said, hey, we're building this like metaverse that justified him buying all these GPUs, when in reality he knew that it was never going to be the metaverse, it was going to be AI, and he already had an advantage? Like, that's an interesting thesis. I don't think Zucks actually thought that far ahead, but if he did, that would be the most like OG thing ever if he did that.
Just spending all this money on NVIDIA GPUs so he could get a head start of them. So he's showing the way. Now, if you're sitting in the seat of Andy Jassy, or Microsoft or OpenAI, are you going to let, another one of these competitors just, take the lead and become the dominant, player in AI going forward? I just don't think you can do that. And you're only spending a minority in some cases, or just, certainly less than your annual free cash flow that these companies are generating. So you're not going to spend that money just like leaving it on the balance sheet, and you're not going to spend it on M&A because Lena Khan's not going to have anything to do with that. So, I think it was Eric Schmidt in that same talk that said, a lot of these people look at the investment in AI as like, what's the return on investment on intelligence? Like, they see it as, a lot of them, infinite. I mean, there are going to be some shocking applications that are going to come out over these next 2 years. I've seen some already that just make the hair stand on the back of my neck, Scott. So I know everybody's impatient to see the applications, but they are here in some cases, and they will be coming shortly. I mean, we're still less than 2 years away from ChatGPT's debut.
I got you.
So, I mean, look, you either, if you're an NVIDIA shareholder, you either believe in that or you don't. Zucks probably did not have this like master plan, even though if he did have that plan, dude, that's a hell of a plan. But you have to, again, for those that are afraid about NVIDIA today, again, you have to believe. Also, the other thing about being afraid of NVIDIA, dude, unless you bought it at like 150, the damn thing is up 160%. So, I mean, it's like me complaining about Palantir going back to 26. Like, that sucks. It's not at 30 anymore, but that's just not something to complain about given where we started off during the year. So in the context of NVIDIA, if you're a little upset today that it's down 4%, you've got to remember that EPS number for 2025 is, like, to me, the golden goose. Because if they do $5 of EPS, it is unreasonable to give them anything less than at least a 25 to 30 PE. And they would probably get a little bit more than that, just given how much excitement there would be if they actually pull off $5 of earnings per share. Which means that you're looking at a minimum stock price of 150-ish, 145 to 150, if they can do 5 of EPS. But to get to 5 of EPS, you have to understand kind of how the company is going to navigate demand, growth, hyperscalers, CapEx, all that stuff. And if they don't do that, then you're looking at a decreased multiple, or a higher multiple on a decreased EPS number. But then you have to ask yourself, will the market in 2025 have the appetite to give like a 60 PE on a $2 EPS number? And those are the things you have to think about when it comes to NVIDIA. If you can't calculate that, then I don't think it's worth owning the stock because it's too much mental pressure holding it. But if you can calculate that, then it's not that scary owning NVIDIA at the end of the day. June says, I believe in NVIDIA like Amit believes in Palantir. Well, that's the thing, dude. You've got to believe, like when Robinhood goes down, I get excited because I'm like, all right, I like genuinely, same thing with Palantir. Like when I see these things, Palantir just hasn't been going down, but like Robinhood obviously took a big hit and it's kind of sustained that hit. Palantir recovered relatively easily after their earnings. But when I see them go down, I get excited because I'm like, all right, it's time. Like I understand the company very well and I'm ready to buy it. With NVIDIA, I don't, I just don't. Like I understand the bull thesis. I just don't really understand the company as much as I would want to. With Palantir, I do. And so if Palantir pulls back to 27, 26, that's a very easy dip to buy. Robinhood going back to 15, 16, 17, that's a very easy dip to buy. The reason I didn't buy NVIDIA at 90 is because I still don't have the confidence or fully understand it. It's not that I'm bearish. I just like legit don't know exactly what I'm buying. Like I still can't fully describe what a GPU is, and I'm not saying you have to be able to know that to own it, but like it's, for me personally, if I can't tell you what Snowflake does, I can't own it, right? If I can't tell you what Palantir does, I can't own it. If I can't tell you what NVIDIA does, like at a more deeper level than just, oh, well, AI, then for me, it's hard to justify owning it. And this is a philosophy I've developed over the past year as well, dude. Like I don't want to own a stock that I really can't get obsessed about because then it's going to be very easy to sell it. As a swing trade, that's different. but as an investment, it's a bit tougher. PayPal at 71.52 ended green on the day. Hims up about 1% or down about 1% on the day, up a little bit in the after hours. Robinhood ended 1989, 1992 in the pre-market or in the after hours. Palo Alto up a little bit. Everything's up a little bit after hours, but they did take a bit of a hit during the day. S&P 500 again down 0.78% on the day. So again, if you own NVIDIA, I would just make sure you understand NVIDIA, and then there's your conviction. It's very easy to own it once you have a lot of conviction. You also start, like, once you have conviction in a name, it gets so easy to deal with the bears. Like when they say something stupid, you just like laugh. Like literally you laugh because like, oh, you're just like not a smart human being when it comes to this topic. Like it's okay to be an idiot, but you are indeed an idiot. Like I just need you, like it's like when I post something about Robin or even Pouncer today, I think someone said something dumb and I was just like, it's hard to even respond to it because it's like, this is wasting my time. Like this is like, if you did a little bit of research, you wouldn't have made this comment. So I'm not even going to respond to it. So from that perspective, you just laugh at people that make a bear case because they're stretching and they don't really understand exactly what they're saying about the company. And I'm sure a lot of people felt that about NVIDIA, dude. Like back in 2023 when it was first expanded, you know how many people were short NVIDIA? We talked about that a lot. I think NVIDIA had one of the highest short floats in the entire stock market. And everyone who was shorting it, no one actually knew like what was about to happen with ChatGPT. No one actually understood it, but the longs really understood that, hey, if you know we have some use case for AI, then the GPU revolution is going to be here. NVIDIA short float now is 1%, 1.17%. That's the short float for NVIDIA. I think at one point it was 35%. People figured out pretty soon that they did not actually understand this company. Did you see Chip Stock Investor talk about Palantir on YouTube? Yeah, I did see a little bit of that video. I got sent the link. There's this channel that talked about Palantir. I mean, I saw like a little clip of it, so I didn't see the full 30-minute breakdown. But from my understanding, they do feel it's a bit overvalued, which is fair. I understand why they think that. And they don't think there is a massive 10x potential in it. Look, I've said when Palantir was 30 billion on Finance Junkies, we had this debate a lot, Palantir or Tesla. And I said 30 billion to 300 billion is way easier for me to think that 700 billion to 7 trillion on Tesla. So I still remain pretty firm in my resolve that 300 to 400 billion on Palantir, which is not a 10x from this market cap, but is still a 10x from like $15, is very possible. But could I see us going to 600-700 billion? Yeah, dude, I really could. I could see that happening. I think the scale of acceleration on the government side and on the commercial side, and Palantir having the only thing that makes AI meaningful, which is the ontology. I think that's a thesis that plays out aggressively over the next 10 years. So again, we talked about this in the morning. I get that it's overvalued conventionally. I get price to sales of 30 is kind of insane to pay. But I also think there's a creative side to valuing Palantir outside of just the numerical element, because it's going to be a company that's always overvalued because people like the stock. People think it's cool. People like the leadership. There's something about this company that's fundamentally different than a lot of other companies in software. They said it has no moat in software. Well, this is where I laugh, right? If that Chip Stock Investor said Palantir has no moat in software, that's where I laugh. Because in the conversations I have with Chad, and I grill him aggressively, dude. Like when me and Chad talk privately, and I'm like, yo, like really break this down to me, you know, and he really breaks it down. I'm like, oh, okay, so I'm just really stupid about software. And granted, I am, right? I've never worked in tech. I've been trying to learn this shit on my own. When you talk to someone like Chad, who's been in big data for 20 years, and that's why I can't wait till we do the podcast, though. It's going to be a really eye-opening podcast for a lot of people. When he broke down ontology to me, when he broke down why clients are choosing Palantir, when he broke down why he thinks Snowflake is commoditized, it became even more obvious to me what Palantir's moat is. So if you say they don't, it's like the people who say Robinhood has no moat. I'm like, you're stupid. You don't understand user experience. Like, you're actually stupid. If you think Robinhood has no moat, you are stupid. If you think Schwab, Fidelity, and all these guys can just, like, all right, go ahead. But that's why you missed it at $8. They have a very obvious moat. And that moat is that when I put in $500 and I get $5, that's a feeling. A, that takes a lot of innovation to be able to get people to feel in terms of the unit economics to make that real. B, I was also listening to a podcast with Vlad the other day. He did another podcast because he's doing so many of these podcasts. And he talks a lot about the fact that Robinhood, same thing that Karp talks about, has artists inside of the company. And he says those artists, this is the $5 I got yesterday with the 1% bonus match. Those artists want to create art. And they get a lot of inspiration from Tesla and Apple, he was talking about, in terms of the design and the user experience that they want the user to feel. And I think given the growth we've seen this year on Robinhood, that is definitively a moat that's hard to beat, because you can't build the backend infrastructure and design that Robinhood has in a meaningful way to get consumers to stay. And if you could have done it, people would have done it by now. But they just haven't been able to do it. If you don't understand Grindr, you're actually gay. That's hilarious. I don't know if Grindr has a moat. I mean, I think it has a moat. Again, I just hate the valuation. I do think it is more exciting than Bumble and Tinder and all that stuff. And I do think gay people will spend more on the app, all that stuff. But I just hate the valuation. I can't buy it at $12. And maybe I'm going to miss the whole run because I can't do it at $12. I just don't know if it's worth paying the premium for it. I like it. I just don't know if it's worth paying that premium. Did Workday announce earnings? Yes, Workday announced earnings. We talked about that real quick, just going to their actual website right here. So Workday, 17% year-over-year growth, $2.085 billion. Subscription revenues of $1.93 billion, up 17% year over year. They bought 1.4 million shares, so they spent $309 million, $7.3 billion in cash. Backlog of $6.8 billion in subscription revenue, and total revenues of $2.085 billion, meaning they're doing about $8 billion in revenue a year. Workday is a leading provider of solutions to help organizations manage their people and money. Let's go to their website, dude. I've never really explored the company itself. Workday Enterprise Management Software. Only Workday unites finance and HR on one platform with AI and continuous innovation at the core, so you can move forever forward, empowering your people with personalized experiences. And then there's a guy with a turban on the website. Okay. So honestly, dude, I really don't understand what Workday does. I haven't gone super into it. I think it's when I think of them, I think of like Monday.com. But Monday.com is more project management. It's similar to Atlassian, whereas Workday is a bit different than that. But it's enterprise software, and they're doing $2 billion a quarter. Palantir is going to quickly, I think, in the next year, start getting to that $950 to $1 billion a quarter. And so SaaS companies, they're able to scale. They're able to really get this thing going. It's just a question if they can keep up that top line growth of 30% and then the margins, keeping those at 40%. Workday, not sure what their margins are, but the stock has not had a great year. And it's down after hours, and it's down about 14% year to date. So I guess the growth has not excited the street as much as some of these other companies. It's like SAP, Salesforce, etc. That's what I thought. It's kind of like, and this is the other thing Chad and I were talking about, dude. He feels like a lot of these enterprise software companies are so outdated, so old. They all do the same thing. And he thinks Palantir can take over a lot of what business they're offering and what products they're offering. So his vision for Palantir, again, is very large in terms of where he sees the total addressable market. And that's where I think the growth is going to surprise people over the next few years. That doesn't mean we're not going to see drawdowns. That doesn't mean we're not going to see, we've been blessed over the past 4 earnings to see Palantir just go up after earnings outside of Q1, which I think was a little bit of a fluke back in May because they still were good numbers. The stock market was just being dumb. But we have not had a real earnings yet where Palantir collapses like 30%. And it's like disgusting, right? We haven't felt that in a while. Ever since they became GAAP profitable, we haven't really, if we had a bad earnings, it was kind of flattish. It hasn't been like horrible. So I think, that'll happen eventually because that always happens in the market, but that'll create a great opportunity as long as nothing is disrupted in the thesis. And, we'll see what happens from there. We don't know, guys. 2025, if shit hits the fan in 2025, all these stocks get re-rated. And I think, everyone was thinking the recession would come in 2018. We had a pseudo recession in December of 2018. Then Jay Powell cut rates. That helped in 2019. I think that same thing is happening right now. We're anticipating the pseudo recession. We're seeing some weakness. Then Jay Powell's going to cut rates. That's going to help. But then by 2020, we got the recession. Now, the thing is, in 2020, it was a pandemic fueled recession. So it wasn't a real recession in the stock market because the stock market had interest rates go so low that asset prices inflated, even though there was 15% unemployment. So it took 2 years to get the stock market recession, which was 2022, where all that excess liquidity got out of the system when Jay Powell raised rates. Is 2025 going to be where excess liquidity leaves the system? I don't know, because rates are only going to be coming down. They're not going to be going up. And these asset prices are not artificially inflated, in my opinion, because rates are already high. So if they're artificially inflated, they have to be comped against a risk-free adjusted return of 5.5%. So if a stock is up more than 5.5%, it's because it earned those numbers outside of like the meme stocks, and it justified the growth, or else that money would have left to money market funds. So I don't know if 2025 has to play out the same way 2022 played out. But if it does, there's going to be buying opportunities across the board. And I think right now we're just trying to get through 2024, see if we can protect the gains, and see then if that momentum can carry on into the next couple of years. Sona says, I work with Workday. It's garbage. Yeah, I've never used it. If anyone in the chat uses it, let me know what you guys think of it. But I've never personally used it myself. I attended Salesforce demo using their AI Einstein today. What a shit show. It was terrible. Okay, so we talked about this a while ago. We looked at Einstein and what Salesforce offers when it comes to AI. It's just a chatbot, like from my understanding, and it's not really anything more special than that. And again, that's another moat for Palantir. Like at the end of the day, I think they're offering much more than just a chatbot, which is what Salesforce is offering. But I can imagine how people don't get value from that, and if you don't get value from that, then it's going to be hard to upsell clients on that type of program. Carp sold another 575,000 shares as well, not visible on the website, but for me, it's on SEC's Edgar. Let me see if I can pull up the form. Palantir corporate actions releases. Yeah, I don't have it either. But I believe you. It makes sense. 575 is usually the number that that Carp ends up selling. Yeah, okay, so it makes sense. Carp selling more shares as well. So Carp, Ryan Taylor, Shyam Sankar, David Glazer. Those are the 4 people, CRO, CFO, CTO, and CEO that have been selling shares basically in this $30, $34 range or $32 range over the past couple of days. Average price of $32.54 per car. That's almost the same for Shyam. Shyam was $32.55. Okay. So I want to be in the room one day when bankers, like it doesn't have to be for Palantir. I want to see what it's like to sell shares for an insider and what that process looks like. Like I want to see how institutional investors have like is it some guy who's like looking at the best price and then he presses sell, or is this some algorithm that's uniquely designed to get the best price? Like I'm so curious how they, because their shares are obviously not in like a Fidelity account on your phone. I would imagine it's like in some fancy structured system because everything has to be registered immediately and filed with the SEC. So I am curious how that ends up playing out. Is Chad going to do a podcast about Palantir? Yeah, me and Chad will. He's also working on a video about ontology that'll come out. So I think in the next couple of weeks that stuff will be out for him. Nikhil says moat of these enterprise softwares is that it's difficult to build one and difficult to replace in a company as critical business processes are built on that, like supply chain, finance, procurement. That's a good point. Like Snowflake, why are they making $850 million in revenue? It's hard to leave, So even if you're not a fan of Snowflake, even if you use the company, to get an organization to get off of it is tougher. Snowflake down 14% on the day. So this is why the earnings was so interesting, because they're still doing, a pretty strong revenue growth. There's just no broader vision for investors to get excited about, but it's not like they're losing customers. Their net dollar retention went up. It's at 128%. They're getting customers to spend more with them. It's just investors don't see the vision. And that's where the delta between actuality of results and communication is so important. Palantir is not growing as much as Snowflake, although I think in the next couple quarters that's going to change. But their communication around the nature of their business fundamentally is differentiated from Snowflake if you just listen to the two companies speak. And I think in the stock market, that does create a difference in terms of valuation. Meta right here at 5:32 after hours, Microsoft at 4:15, Starbucks flat on the day, Tesla again 2:11 after hours, down about 5.6%, Uber now down 2.82%, NVIDIA up a little bit at 124.40 after hours as well. All right, folks, that is it for me today. That's all we got. We'll be back. What is the news on Rocket Lab? There's no news on Rocket Lab from my understanding. Rocket Lab was just up today because the broader market was up. So I don't think there was any major news on Rocket Lab today. We'll be back tomorrow, 8:45 a.m. End out the week for Friday. Keep going from there. We'll have TJ on the show tomorrow, and we'll discuss options and everything that's going on in the world of options. Tomorrow might be red. We'll see if tomorrow's red. Friday sell-off, money market funds increased, 2 weeks of green. It wouldn't surprise me if tomorrow's red, but we'll see what ends up happening. I talked about the new Robinhood features on the Monday show, so you can go to the chapter and look at it, but essentially they introduced futures. It's not fully out yet, but those futures, I think is going to be a massive revenue stream for them. So I talked about that in the morning. Oh, and then JPOW tomorrow, 2 p.m. JPOW, 2 p.m. So after the market open, I think we'll have like an hour or 2 hours of break, and then JPOW speaks. So, no, he speaks at 10 a.m., right? Maybe TJ and I can't do our options episode at 10 a.m. Does anyone know exactly when? I'm pretty sure he speaks at 10 a.m. If that's the case, then we're going to have to delay the options episode for like an hour tomorrow. Jerome Powell, Jackson Hole speech time. 10 a.m. ET. Yeah. All right. 10 a.m. So I guess TJ and I will probably do our options episode at 11 a.m. if he's still available. If not, then we might delay it for a week. But J Powell at 10 a.m. That's confirmed. 10 a.m. Lockheed Martin CFO went to Rocket Lab. What? Really? No way. That's a weird rocket. Well, actually, rockets. Yeah, defense. Yeah, there you go. Lockheed Martin CFO joining Rocket Lab. Interesting. I kind of like that. The Lockheed Martin CFO knows probably a ton about the unit economics around defense. Rocket Lab's trying to get more defense contracts. I like that. That's a nice move. I didn't know that today. Thank you for that, William. That's not bad. Rocket Lab on the day, it was up 4% at one point. Rocket Lab ended the day down 2.29% at 684, but it's out of that $4 purgatory that it was stuck at for like 5 months. So I think Rocket Lab shareholders are probably happy about that. That's not too bad. I like that. And then S&P 500 right here at 556.82 after hours. All right, cool stuff. Thank you, everybody. I'll be back tomorrow, 8:45 a.m. We've got J Powell at 10 a.m. Let's see what he says, what he signals. 10 a.m. Eastern, and that'll determine what happens in the broader market. All right. Thank you, everybody. Have a good one. I'll see you guys tomorrow morning. Bye, everyone.